kicked off the earnings season with General Electric. Haven't done that in a long time. We focus on the big banks. Got it, understand, but how much attention we have done on those big tech names as of late, and certainly the last few years. So you do see, how things have moved to different focuses. Having said that, it does feel like Steve is also emphasizing what we're hearing from a lot of macro managers, this whole idea of pushback against globalization, climate change. These are real, and they're impacting where people will be making money.
Well, I think that's right. And I would also just add that it's not just investors. You're seeing governments increasingly talk about this. In the U.S., of course, we've had, billions of dollars being poured into the reshoring of the semiconductor industry. And the Biden administration, of course, has gone quite hard on renewable energy. We know that money is being earmarked for those purposes. So it's not entirely out of the realms of possibility to think that that's where money is going to be made in the future. You are going to see more of an emphasis on actual things versus sort of, software and the internet and consumer-facing tech and things like that. The question, of course, is how investors adapt to that new reality. And you do have a generation, you mentioned this earlier, a generation of people who are very used to thinking and talking about the big tech firms, thinking in terms of total available market. This is something that Eisman brought up. There was actually a very funny quip where, he talks about how do you know something is, speculative? Well, a sell-side analyst writes a report where they say the available total market size is whatever. And his point is, yes, you can look at things and say this is a massive market. Look at housing. But just because a company is dealing in housing, that doesn't necessarily translate into a business model where they are going to dominate an entire sector. And indeed, if you look at,
right,
share prices recently, look at Zillow, I think investors are starting to learn that message.
Great stuff. Tracy Alloway, executive editor at Bloomberg News. She co-hosts the Odd Lots podcast with Joe Weisenthal of Bloomberg. Catch it at Bloomberg.com, wherever you get your podcast. That's where you can hear the conversation. We apologize. We had planned to play a little clip, but you can check it out there. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Oh, you know, and we are looking at a mixed day right now with the Dow Jones Industrial Average up 17 points, a turnaround there. The S&P down 15, drop there of 0.4%. Nasdaq down 70, a decline there of 0.6%. 10-year yield right now 3.62%, with the 2-year 4.44%. Stocks pulling back after this year's rally on speculation the Fed will keep its monetary policy tight to tame inflationary pressures. Gold up $6 the ounce to $18.70, up 0.3%. West Texas Intermediate crude up 1%, $74.09 a barrel on WTI. Alphabet's Google getting its ChatGPT competitor ready for prime time. Company says its new controversial AI service called Bard will be opening up to trusted testers, and that it is readying the service for the public in coming weeks. Right now, we have got Alphabet shares down 1%, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. And as we promised, we wanted to get to a few of the most read stories on this Monday. This next one included, it's about how M&A bankers, they're kind of busy again after the slowest start to a year in 2 decades. I mean, Tim, there was a bunch of stuff going on over the weekend, apparently.
Yeah, more than $40 billion plus in potential transactions came to light over the weekend. And what does it say about deal activity in the broader market environment? Just a handful of the questions we want to get to with Bloomberg News deals reporter Crystal C., who's right here in the Bloomberg Interactive Brokers studio. Okay, so first up, just remind us of 2022, how bad it was, and where we are so far in 2023.
So 2022 was not great. M&A volume for investment banks down 31% last year. So bankers are getting smaller bonuses. And January, the last month, it was the quietest, like Hara said, since 2003 for the beginning of the year. So it was
lousy last year, right?
It was bad. It was not good. And it was a couple of different reasons. People are not confident because of the financing market. And when you have a tough financing market, traditional lenders get very jittery about giving out loans, and a lot of banks actually incurred losses on these big LBO transactions, and that made them even less confident later on in the year. So a lot of these reasons, combined with management not feeling like they could do a transaction easily, also made the M&A transaction volume go down. But this Monday, we finally have a merger Monday in the second month of the year. So it's interesting. It's also across different sectors.
So let's talk about it, because mining seemed to be a big one.
Mining is a big one. We don't really see many mining deals, so when we do, it's gigantic. And like this one, there's a U.S. and Australia angle here. Newmount and Australia's Newcastle Mining announced a merger. It's the biggest deal this year so far, $17 billion. And we also see things across storage, self-storage. There is financial services with Rothschild family trying to take the company private. $4 billion U.S., not the biggest deal, but is a name that we all follow.
Yeah, absolutely.
Are there big pictures that it can paint for us about what 2023 is going to look like when it comes to the economy? Is there more certainty here finally?
I think it all comes down to interest rate and the financing market. A lot of these deals, most LBOs hinge on leverage buyouts, right? So as long as the financing markets improves, we will see more deals come back. And we also see the comeback of private lenders. A lot of these private equity firms now have credit arm that they are willing to back not their own, but some of other people's or other private.
This is the private credit market, right? That really seems like everybody was talking about big time last year.
That's right. So private credit is an alternative resource that a company can use to tap the M&A market, but also there's something called, seller's assistance. So if you're a friendly acquirer, you can negotiate with the seller and they can give you a little bit of a cushion, write a check, or you can pay them back later on. So there are many ways you can try to get a deal done, but you have to be creative in this market.
We've certainly seen rates go down, at least as a result of what bond traders think is going to happen and what the Fed is going to do. But at the same time, Jay Powell has said, may not cut rates this year. We've got a lot of work to do. I've been kind of beating that drum for almost a week now. Has the credit market changed?
Yeah,
Has
so
financing changed?
financing market is still tough. It's not drastically improved compared to end of last year. So I don't think immediately we will see a flurry of transactions, and we'll see many, many merger Mondays from now on. And you can also see that reflecting in Wall Street personnel changes. You see a lot of layoff across Wall Street, and
Including in the deal space.
including the deal space. M&A bankers are not having as tough a time compared to the capital markets bankers, but you also see that, you know, banks are expecting less work in transactions, and therefore they need less people.
So just because we're seeing some activity doesn't necessarily mean we're going to see a bunch more this year.
Not necessarily immediately, but a lot of deal makers are saying that in the second half we could expect more.
I am also curious that if we continue to see some rises, I know in equities we're seeing a little bit of a different tone certainly today, and I felt like, you know, late last week. But if we continue to see markets go up, are we likely to see more kind of stock deals being done because they've just got a greater currency? I mean, obviously the targets, if they're public, potentially have gotten then more expensive as well. But does that often lead to more deals as well?
Yeah, we're seeing some stock deals. Actually, just this week, yesterday, there was a hostile takeover. There was a bear hug letter where one storage company was trying to acquire the other one in an all-stock merger, and not only are they giving stocks, they're also putting in an extra dividend as a sweetener. So there are many ways you can structure deals, but equity, you know, it's not traditionally the most attractive.
Right.
And when you have shareholder and board members trying to evaluate these transactions, it's going to be less appealing than an all-cash transaction.
Hey, talk a little bit more about private credit. Carol alluded to the fact that, you know, I think you were referring probably to when we were at Milken, Carol.
Yeah.
Private credit
Just the
was
private
that
markets,
April
yes.
of last year?
Yes.
We talked so much about private credit. What does that look like for 2023?
Yeah, private credit is a really, really big topic. Every private equity firm, every firm that started as a private equity firm has pivoted, or also diversified into private credit. And it's interesting because, I mean, people talk about the potential conflict of interest here, right? When you're really pricing things properly, but it's obviously a huge pool of capital, and it adds on top of whatever private equity have already raised in their regular funds. So it's an interesting pool of resources, but obviously traditional investment banks, lenders are still the bread and butter, or the still main source of capital in this M&A market.
Crystal, what are you hearing in terms of from bankers specifically? Are they saying, wait, we've got a lot of things in the pipeline. People are just waiting to pull the trigger. We just want to kind of get a little bit more certainty about what the Fed's doing and what the economy's doing.
Yeah, I think the joke is that you will never encounter a banker that is not optimistic.
That's fair.
So there's always something that they're working on. I don't think anyone can very confidently say that there will be mega deals in the first half, but there's hope.
It's like what Neil Kashkari told the New York Times last month, right? And it's quoted in the cover of Business Week. It's a notoriously optimistic crowd on Wall Street.
It is true, right? Right? There's optimism out there. So what are you keeping an eye on? Are there certain sectors, though, nonetheless, you guys are reporting on stuff, you know, waiting for things to happen, but in the meantime, you know, you're also just kind of trying to read the tea leaves. So what do you kind of follow?
So there are a lot of activism going on right now. And we just came out of the Salesforce, Elliott. That hasn't really entirely settled. This week, there are some IPO coming back, actually. So green shoots of the market's coming back. There are 3 deals that's supposed to price just this week. So it's not really M&A, but people in the deals world are doing work.
Are you watching Disney with the activism, too, as well?
Yeah, Pels is getting really busy with that, and with his consumer company, he's also in Unilever. So Disney is a really interesting situation.
What about when it comes to private equity firms that are going after targets that have been beat up in the public markets? Do you think we see more take privates?
So a lot of the IPO that went, the company that went public in the past 2 years, actually a lot of them are trading way below offer price. And that means they could be prime target for private equity. And we've seen some of these deals pan out. And even the companies, for instance, like Weber, the barbecue grill company, was taken private by the BDT, which was a private
And they just went public, Like they went public during the pandemic, right?
They did yes. And it was like the whole, you know, Traeger, Weber, Solo stove.
Because we're all outside grilling all.
That's right.
Carol was outside grilling all our Impossible and Beyond burgers.
That's a no. That's a no, as you well know. I am curious, are you hearing anything when it comes to deal activity, interest in things AI related?
Ooh,
You could say no. Although the stocks, I mean, they're really on the move. Any kind of little player that's got an AI connection.
well, we aren't, but I mean, they can probably help us write some stories from now on. Like,
Don't
good.
say that. Don't say that. Crystal, thank you so much. Gut check on what's going on with M&A. Crystal C., she's deals reporter here at Bloomberg News here in our interactive broker studio. I mean, we're going to talk about this with our colleagues in a little bit, but those AI stocks are just
It's like
off and
2017
running.
all over again when they put blockchain. Like, what was it? Long Island Iced Tea Blockchain Company, and then the stock shot up as a result of that.
It's so true.
Do you remember that?
Just be like
5 years ago,
blah, blah,
6
blah,
years
blah,
ago?
blah, AI.
Yeah.
And you're off and running.
It's pretty incredible. Some of these stocks, though, if you take a look at the big picture, Carol, like
Yeah.
back to the IPO days, like C3.ai, for example, it's not even close to where it was when it IPO'd.
No, a little perspective,
BuzzFeed,
right?
too.
Right, exactly. And they're pretty small cap, micro cap kind of companies, but nonetheless, all of a sudden, investors are looking at the group in a big way. All right, if you want to read more of the story on M&A, just head to Bloomberg.com. Right now, we've got markets bouncing around a little bit. I did see the Dow go into green a few minutes ago, but it's now down about 10 points. NASDAQ, a decline of about 0.75 percentage point, Tim, and you've got the S&P. It is down about 0.5%.
And we got still earnings after the bell, too, Carol. Activision, Take-Two Interactive, Pinterest, and then Skyworks as well. So we'll bring those results to you live as we get them.
They continue to come, right? All right, you are listening and watching Bloomberg Business Week on this Monday. Carol Masser along with Tim Stenovic. It is time for a check on world and national news. Off to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. Well, President Biden will be setting out his wish list for Congress in his State of the Union speech tomorrow night. Bloomberg's Irv Chapman has more from Washington.
The president has been calling for bipartisan compromise. Isaac Boltanski, director of policy research for the firm BTIG, said in a Bloomberg interview he might find it on only two major issues.
One is China hawkishness, and the other is big tech bashing, with their concerns regarding the growth and expansiveness of the big tech companies. The problem there, however, is what is our response? Because both ends of the ideological spectrum have a disdain for big tech for different reasons.
The appearance of TikTok's chief executive at a congressional hearing next month, Boltanski said, will be crucial to the fate of his firm in the United States. In Washington, Irv Chapman, Bloomberg Radio.
Treasury Secretary Janet Yellen says inflation is coming down and the economy is on a path to avoid a recession.
You don't have a recession when you have 500,000 jobs and the lowest unemployment rate in more than 50 years.
Secretary Yellen appeared today on ABC's Good Morning America. Officials in East Palestine, Ohio say they are faced with what they call, quote, no great choices in Friday's mile-long smoldering train derailment. The train was carrying toxic chemicals, and Ohio Governor Mike DeWine says this afternoon they'll try to alleviate the risks from the cars exploding.
Vinyl chloride contents of 5 rail cars are currently unstable and could potentially explode, causing deadly disbursement of shrapnel and toxic fumes. To alleviate the risk of this shrapnel, Norfolk Southern Railroad is planning a controlled release of the vinyl chloride at approximately 3:30 p.m.
Governor DeWine is, of course, referring to 3:30 Eastern Time. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It is 2:40 on Wall Street. I'm Charlie Pellet. Choppy session for the Dow. A few minutes ago, it was higher. Right now, the Dow Jones Industrial Average is down 30 points, a drop there of 0.1%. S&P lower by 24, a drop there of 0.6%. Nasdaq down 110, a decline right now of 0.9%. Stocks continuing to retreat today on speculation the Fed will keep monetary policy tight to tame inflation, stemming from a still hot labor market. 10-year yield now 3.62%, with the 2-year 4.44%. Spot gold up $3 the ounce, up by 0.2%. West Texas Intermediate crude up 1.3%, now $74.33 a barrel. Occidental Petroleum CEO Vicki Hollub tells Bloomberg Radio stock buybacks are taking priority over output growth.
The most important thing that we can do is invest our dollars in a way that delivers the most returns to our shareholders, and that's by optimizing the dollars that we invest. And so for us, growth doesn't mean necessarily increasing returns. We only will grow as we need to continue to deliver our value proposition, which is to have a growing dividend, also while returning shares and dollars back to our shareholders.
She made the comment during an interview with Bloomberg Radio at the SMED Investor Oasis Conference in Scottsdale, Arizona. Shares of Occidental Petroleum, they are up by about 0.2%. Sticking with commodities, Newmont shares fell after the top gold miner made a $17 billion proposal to take over Australia's Newcrest mining in what would be the world's biggest gold deal. Newmont down by about 4.8%. Shares of Newcrest, they're up by 12.6%. Again, recapping, stocks lower. S&P down 26, drop there of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So safe to say we are all a bit obsessed with ChatGPT, right? Since Microsoft's $10 billion investment, we are hearing about it in earnings calls. Google did their own, albeit much smaller AI deal. We talked about it with Kathy Wood last week. And then there is a Bloomberg Business Week story that you can find online that definitely takes it into account.
Yeah, our team put ChatGPT to the test on a Wharton exam. With more, we've got Dimitra Kasanides, a senior editor at Bloomberg News, on the phone in New York City, along with the editor of Bloomberg Business Week, Joel Weber, in our Bloomberg Interactive Brokers studio. So, Joel, how did ChatGPT do on that Wharton exam?
Well, we're going to find out. I do think, just in general, it is causing existential crises everywhere you look, right?
Speak for yourself, man.
Yeah, it's all going to be great. And I think, an MBA or tests in general, I've heard from some professors who are like, I've had to upend my entire curriculum to account for ChatGPT. So that, proving that, an AI program didn't actually do the students' homework. AI ate my homework. I think we'll get used to that.
Exactly.
So, Dimitra, take us to Wharton and the professor who you based this story around.
Yeah, I think those are all good points. Christian Turwish teaches at Wharton. And, it started as kind of a fun conversation over the holidays with his sons, who both have dealt with other AI programs. We're intrigued by it. Our B-Schools coverage sometimes is about research that can feel very out of touch with what's going on in the real world. And Professor Turwish was very quick and nimble to say, hey, let me see what this thing is about, all the hubbub. Let me give it an exam that I've given to my students. It did quite well. It did above average. It got a B-. But it is not, the context of a business school course and a business school exam is not the kind of context in which, students can realistically put the chatbot to take the exam for them. That's not to say that the concerns of educators across the country, as the professor noted to me, are not legitimate. There are many educators with far fewer resources than a Wharton professor who do have to contend with the reality of how students are going to use this. He used this as a way to see what it's all about, and then as a way to say, hey, this is very powerful. It's doing quite well. It's answering in ways that legitimately might pass as a student. How can we use something like this more creatively in our classroom? Our job as educators is to really think about how to bring education along and be more creative and really spark imagination. And so this is the first step of this one professor in trying to do that.
Did the professor give you any idea how he would actually use it in a classroom?
Well, I mean, he gave me an idea off of something that we talked about in the conversation. Like, let's say he was teaching philosophy, for example, not business, but you can swap out people. And I mentioned this in the Q&A, and he says, you know, I want you to go back to your libraries and to your apartments and research, you know, the work we studied on Sartre or on, you know, Camus and Sartre. Write me a 500-word essay on the differences between these two. You know, they might go home and decide to have ChatGPT write the paper for them. But what he might do that would be even more effective is have ChatGPT really engage in a conversation. That's what these chatbots do with students. And step in as the philosophers, the French philosophers, and do something that might spark some more creative ideas with the students. And so he, as the professor, could certainly be in a position to introduce the use of the chatbot in that way.
Demetra, I got to jump in for a second, because how did it do when it came to, which I bet the whole student body universe is saying, I hope I can do math. How did it do on math?
Oh, it doesn't. They don't do well on math, at least in this instance. And he said that that's something that, you know, I think we see that across the universe of stories that have been done by Bloomberg and many others. What you said is true. Everybody's kind of in a frenzy about this right now. Mathematics, it did not do well. And I mean, Professor Turvish was very funny about that. I mean, it's like you're a computer dude. Like, you can't actually like put some numbers together. And in fact, numbers is where it was really tripped up, and it was more in language that it was far more impressive, and in logic and application of logic. So it was all around super surprising to him. I think that he, as well as many others who are engaging with ChatGPT right now, it's a little tough to do. You go to the website, it's so popular, there are so many users that generally what you're going to get is a message that says ChatGPT is at capacity right now. So you can't even try it because the world is trying ChatGPT. But he did it quickly. He wrote a paper and he said, I was really impressed, and I think I'm going to try to think more creatively about how to use this. And I think that in that context, I mean, I want to be clear, we came at it with a very specific sort of context of B schools, you know, teaching business, teaching case management, and so on. You know, there's probably going to be space for something like this. It will emerge in time. I don't think that we have the answers right now in terms of, like, this semester, how is ChatGPT going to become, you know, a stand-in for something in the curriculum? We're not there yet. But
B minus is B minus. Take that computer.
Not a D.
Yeah,
not a D minus,
but also not an A. Yeah.
I mean, everything's on a curve in business school anyway.
Yeah.
So, you know, it kind of doesn't matter.
There you go.
So one of the things that stuck out to me, Demetra, was him saying we are not running out of work. But what is shifting is the efficiency frontier. And I'm curious, you know, this would be an optimistic take, I think, on ChatGPT, but what is it? What is the potential here in a classroom?
I mean, again, I think that there are ways he thinks to use it and engage it to be added. I hate to use the word additive, but to engage brains and students in a way that there isn't time enough in the classroom, but it's to extend the learning that's already happening. You're going to the internet, you're looking for videos of things as it is, you're looking up resources. So this might take it to another level in which it's not as passive, though. It might be more active. He does have a far more, let's say, positive and optimistic view, which is that these things should be seen as tools that are very innovative and technologically advanced, that we should not really be so fearful of them as replacements for actual people in many settings.
I mean, Demetra, you wrote this Q&A, not ChatGPT.
Are you sure, though?
I'm not sure.
Yeah,
did a robot do this interview?
A big secret. It's so funny. I mean, I was just reading an interview that a former colleague of mine from a time I worked at a company called The American Lawyer, he did a Q&A with ChatGPT and just posted it on LinkedIn. And he's asking ChatGPT, like, if Nike wants to sponsor you, will you accept the sponsorship? And ChatGPT is like, I am an open platform. I am not somebody who's going to give in to sponsorship by private interests. It's a very interesting back and forth, and it's actually like a real engaged, like, intelligent conversation that this individual had.
Everyone sells out for a price, Joel, right?
Well,
Dimitri, you know, it's not
or
real.
B minus.
It's a computer.
I can't wait for Google's Bard, which is also in the headlines now, to have a competition or a conversation.
Bard, that's an
AI
optimistic name for that.
All right, we got to run. Joel, Dimitra, thank you.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pella. 2:53 on Wall Street. Alphabet's Google is getting its Chat GPT competitor ready for prime time. And with the latest on that story, here's Bloomberg's Steve Rappaport.
Charlie, the company says its new conversational AI service called Bard would be opening up to trusted testers and that it is readying the service for the public in the coming weeks. The service aims to generate detailed answers when given simple prompts, such as what to make for lunch or how to plan a friend's baby shower. In addition to the release of Bard, Google will allow developers to tap into its language models to create their own applications. Charlie?
That's Bloomberg's Steve Rappaport reporting. Sources tell Bloomberg the U.S. is preparing to slap a 200% tariff on Russian-made aluminum as soon as this week to keep pressure on Moscow as the one-year anniversary of the invasion of Ukraine nears. Shares of Alcoa, the largest American aluminum producer, down today by 2%. AMC Entertainment Holdings will be increasing the price of theater tickets for the seats that filmgoers covet most, and that is the middle of the middle row. The world's largest theater chain chain is experimenting with a tiered pricing structure based on seat location called Sightline. If you do want to be in the center of the theater, you will be paying more. AMC Entertainment shares, they're up now by 7.9%. Dell Technologies eliminating about 6,600 jobs as it faces plummeting demand for PCs, becoming the latest tech company to cut jobs. And those are the company stories we're following this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. This is your daily reminder from Innovation Refunds. It's time to take advantage of the newly extended Employee Retention Credit. Innovation Refunds has helped small and medium-sized businesses impacted by COVID-19 claim over $3 billion in refunds, and they are standing by to help your business get back the money it may be eligible to receive. Learn more at getrefunds.com.
All right, it's time for a check on World and National. Here's Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. U.S. officials say improvements ordered by President Biden to strengthen defenses against Chinese espionage is what helped identify last week's spy balloon. They say it also helped determine that similar flights were conducted at multiple points during the Trump administration. Former U.S. Ambassador to China, Gary Locke, tells Bloomberg shooting it down over water was smart.
Had they shot it down over land and it had come plummeting down onto fields, onto buildings, it would have the pieces would have been demolished into smithereens, into millions of pieces. Here, at least in shallow water, they're able to retrieve it and hopefully gain sizable pieces and analyze it.
Former U.S. Ambassador Gary Locke, who's now the interim president of Bellevue College. They're still clearing debris in southern Turkey, where a magnitude 7.7 quake left about 2,000 people dead, plus more in Syria. That was followed hours later by a magnitude 7.5 in the same area. Bloomberg's Owner Ant reports the damage is widespread.
According to President Erdogan, Turkey's President Erdogan, more than 3,000, just around 3,000 buildings have collapsed on the Turkish side alone. So this means even without the second tremor, we would very likely see a dramatic increase in the number of people who got killed or injured because of the earthquake.
Bloomberg's Owner Ant reporting from Istanbul. Authorities say they stopped an attack against Baltimore's power grid that could have caused widespread damage. Police arrested 2 people, Brandon Russell in Florida and Sarah Clendaniel in Maryland, for plotting the attack. U.S. Attorney Eric Barron.
As the criminal complaint alleges, Clendaniel and Russell conspired and took steps to shoot multiple electrical substations in the Baltimore area, aiming to, quote, completely destroy this whole city.
Eric Barron says the suspects had racially motivated extremist views. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much for that update, Nancy. February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for Monday, February 6th, here's Bloomberg's Justin Milliner.
Thank you, Tim. On this day in Black history in 1993, groundbreaking U.S. tennis player Arthur Ashe passed away at age 49. His life, of course, cut short due to AIDS. While his illness and passing was tragic, Ashe made sure that he left a positive legacy. During his final years, he dedicated time to educating people about the illness and created the Arthur Ashe Foundation for the Defeat of AIDS. Now, this speaks to his character and adds to his legacy as a trailblazer and an activist. On the court, Ashe was an excellent tennis player. He was the first black tennis pro to win singles titles at Wimbledon, the U.S. and Australian Opens. Later in his career, he worked with attorney Sid Davidoff on a team that was pushing to have what's now Arthur Ashe Stadium built. Sid shared a tidbit about Ashe with Bloomberg, which really puts into context just how trailblazing and groundbreaking his presence in tennis was.
When he won the U.S. Open, when it was in Westside Tennis Club in Forest Hills, he won the U.S. Open there, but he couldn't be a member of the club.
Today, Arthur Ashe Stadium is home to the U.S. Open and has played host to some of the sport's greatest moments, ensuring that Ashe's name will forever be linked to greatness. That's Today in Black History. I'm Justin Milliner.
All right, Justin, thank you so much. So appreciate that. Justin will be back tomorrow with another installment of Black History Month. In the meantime, we're watching the trade. It does feel like a little bit of a breather as we get ready for comments. A Bloomberg exclusive tomorrow with Jay Powell, what he has to say about rate policy going forward. That'll be a big deal. All right, we're heading over to our TV colleagues, Tim and myself, because Bloomberg's countdown to the close, it starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left to go here on this Monday afternoon. Romaine Bostic alongside Scarlett Fu. We're joined right now by our colleagues Carol Master and Tim Stenovic. Welcome to our audiences across Bloomberg Television and Radio, as well as those folks streaming this on YouTube. Interesting price action today, Carol. We talked about a market that really got a wake-up call on that strong jobs report on Friday, carrying over here into this Monday, not just about the equity market, but of course about the big jump in yields, a repricing of Fed expectations.
It really is a bond market story. Having said that, I do think when you look at the equity universe, it does feel like we're taking a bit of a breather as we wait for all of those Fed speakers, including Jay Powell tomorrow. Having said that, not taking a breather has anything to do with AI and artificial intelligence.
You got me. I thought you were going to China.
I catch you? See? Love to surprise Romaine. All right, let's bring it up for everybody on TV.
AI, everything
YouTube.
AI, blah, blah, blah.
Wait.
Okay.
So you have SoundHound AI. It's up about 34%. You've got, GuardForce AI. It was up earlier. It's now down about 14%. All right. C3
I didn't hear
AI
you, Romaine.
is up about 3.5%. You know what? They were all on a tear, and they have been on a tear since Friday. It's just interesting to see that once, Microsoft makes that big investment, Google makes another investment. You had Google coming out today and saying it's going to release its ChatGPT rival. It's called Bard to early testers, then to the public in a few weeks. What was your question?
And then did you see, too, Microsoft saying that it's holding an event tomorrow at its headquarters. They didn't say what for, but The Verge is reporting that's also going to be about integration of ChatGPT into Bing.
So watch out, Google is I think what Microsoft is saying.
It's a thing.
Man, what do you got? What are you watching?
What do you think? What do you think of the name Bard? I mean, is that's setting it up for high expectations, right? Is it going to be like Shakespearean?
It's
Are we
very
going to get
Google,
sonnets?
isn't it?
Yeah.
Very alphabet.
They're trying to humanize an AI bot, which is troubling.
That is a little troubling. Hey,
glad when the Silicon Valley.
Romaine, you alluded
we
to
just get back to like normal speak.
Friday's payrolls report. I wanted to get.
You must have missed us, right? You were off.
I'm welcome back, Romaine. It's good to have you back.
You know, there was a balloon floating overhead that I had to deal with.
That was you. Okay.
You shot it down.
You're welcome, America.
All right. Hey, well, I want to talk a little bit about, because we're still getting news from companies about layoffs. Among the latest today, we heard from Dell. It's shedding around 6,600 jobs today. It faces falling demand for PC. Shares down close to 3% right now. Also, Ford. Jim Farley, the CEO of Ford, was on SiriusXM Radio. The interview's not going to air until Friday, but he hinted at cuts to engineers. Remember, Ford has made significant layoffs in the last few months. Shares down about 1.2%.
All the people you want to cut, that seems interesting.
He said it was an efficiency thing. He said that it takes us 25% more engineers.
Don't you feel like that's the new catchword?
To do the same. Yeah, thank you, Mark Zuckerberg, right?
Right?
Yeah.
All right.
Yeah.
Okay, how about getting rid of some of the dealers? All right, let's go here to the broader market here. We talk about a day where I think things are being reset, Scarlett. Down about 0.6% on the S&P 500, so things could be a lot worse. Biggest underperformer today, you're going to find that in the NASDAQ down about 1%, and the Russell down about 1.4%.
And when you look at the industry groups, at least for the S&P 500, it's pretty much a lot of red, although you do have utilities and staples, little change to somewhat higher. Not surprising given that these are your classic defensive stocks, high dividends play, and safety plays when it comes down to it.
One of the bright spots here, at least on the individual stock basis, had been on semiconductor. Those shares were higher on the day, but now moving into the red, down about 0.6%. The company basically giving a little bit guidance that disappointed the street. Folks had kind of brushed that off initially here, and the stock at one point was actually trading up near a record high, moving a little bit lower. Going to get Pinterest earnings after the bell here. Another look maybe potentially at the ad space and how social media is holding up. Those shares higher by about 1.4%. Valero Energy, which had actually been on a tear, actually had a record high just right at the end of January, now on a 7-day losing streak, down 2.7% here on the day. And I don't know what the heck is happening with RH. Those shares down 7% here on the day.
But they've been on hardware, right?
Yeah, but they've been on it. They changed their name, Scarlett, but they still sell that gigantic furniture. You can put that in your.
They're up 20% this year.
But it's like an interesting story here, and I feel like the CEO there, he's been very vocal about macro conditions and how that's affecting consumer. But overall, it does appear there's some softness there in consumer spending, at least when it comes to a high and furniture. But of course, we do have to talk about, again, what's going on in the Treasury market. Biggest two-day jump that we've seen on the 2-year, at least going back to June of last year. And this really is the repricing of Fed expectations. A pricing, of course, we know, guys, that had been to the downside. The idea that the Fed was ready to pause. Now, I guess after seeing, 500,000+ jobs created in a single month and a big inflation report up ahead that could shock a lot of folks to the upside as well, maybe the Fed ain't done.
Yeah, that was a shocker on Friday. Well, weighing in on the U.S. economy.
You know what was a shocker? Did you see that thing Harry Styles was wearing last night? And I know he's kind of out there, but
This is what you meant by you're busy this weekend?
Well, when you're home, under the weather, you get to see a lot of TV.
I actually didn't get to see what he was wearing. Did he win? I assume he won big last night.
Did he win big?
Assume.
Yes, he
I
won
assume.
big.
He won really
He
big.
won big,
Okay.
taking it from Beyonce once again. Thank God Kanye wasn't there because he would have just disrupted it and caused.
All right. Well, you know who wasn't there? I don't think. The First Lady was there,
Are
but
we moving
Janet
on?
Yellen, the U.S. Secretary, was not there. U.S. Treasury Secretary. I did. I watched all of it. Fast forwarded through some of it. Come on, Janet Yellen weighing in on the U.S. economy. She is upbeat. She thinks we can avoid a recession. She talked with the folks over at GMA. Good Morning America. Here's what she had to say. Shh, Remain.
We have a strong and resilient economy. I know President Biden will talk about that. As you mentioned, the unemployment rate is at a 53-year low of 3.4%. Last month, we created over 500,000 jobs, more than 12 million since the president took office. And inflation is coming down. It remains too high, but it's been falling for the last 6 months.
That, of course, was the U.S. Treasury Secretary Janet Yellen on Good Morning America over at ABC. Like this, I love what Torsten Slok had to say about this no landing. I'm obsessed with this idea that maybe the economy does not slow down and that there are upside risks to inflation, which is why central bankers are going to say we got to keep raising rates.
I understand that argument, and obviously Torsten is a lot smarter than me, but I am curious. I mean, there's a cyclical nature to business cycles. We know that. I mean, this is just proven, right? Why are we to believe that this can go on forever?
That what can go on forever?
This idea that sort of the economy just kind of keep coasting without ever having a true meaningful correction.
Well, maybe we had a correction and we don't even know it yet. Maybe we'll look back on the last few quarters and we'll have had a correction. I will say Goldman Sachs out today decreasing their expectations.
The data cost note, right?
Yeah, exactly. This is the Jan Hatzius one. Cuts estimates for the probability of a recession in the next 12 months from 35 to 25%. And typically any given year it's 15%. So it's looking better and better.
Are you saying, Tim, that maybe we already had our soft landing and this is what the soft landing looks like?
I mean, it's hard to say we're in a recession when 500,000 jobs are added to payrolls in 1 month. And yes, things will be revised, but that was just such a blowout number.
It's a good day when we can talk Janet Yellen and Harry Styles all in one conversation. All right, we're going to be back in less than an hour's time. We'll continue our market coverage, our cross-platform on radio, TV, on YouTube, and on Bloomberg Originals. We're going to count you down to the close on this Monday. Wow. Harry Styles, he is
a lot happened
original. Yes, indeed. All right, we'll be back at 4 p.m. Wall Street time. Week. It was the opening skit for SNL this past weekend. What was that Chinese balloon really up to? What does it mean for the renewed tensions seemingly between Washington and Beijing after the U.S. shot down the vessel on Saturday?
Very pleased to have back in our Bloomberg Interactive Brokers studio Andy Brown, former editorial director at Bloomberg New Economy, who spent 3 decades in Asia as both China editor and columnist for the Wall Street Journal. Andy leads the China Hub as a partner at Brunswick Group. It's a critical issues advisory firm. Andy, good to have you with us. We've been so eager to talk to you about this. We spent a good portion of Friday afternoon talking about it. What was going through your head as you looked up at images of the sky over the last week and saw this balloon floating over the United States?
This is bizarre. This is really crazy. Nobody knows really what happened. More importantly, it's hard to know what's going to happen next. I think we can say with some confidence that the image of this balloon, this crumpled Chinese airship, shredded by a Sidewinder missile collapsing into the Atlantic Ocean, is a pretty apt metaphor for the state of U.S.-China relations and a wake-up call. I think it's a real warning that we are one serious accident away from a major geopolitical crisis and one that could spiral out of control. And I don't want to make light of this balloon episode. I mean, it shouldn't have been in U.S. airspace. It was obviously an invasion of U.S. sovereignty. I mean, it was reckless. It was provocative. But, you know, nobody died, mercifully. Nobody was injured. It didn't get much intelligence. The Pentagon even says this, not much more than the Chinese could have got from their own, can already get from their own satellites. And in intelligence terms, there's going to be a net plus for America. They're probably going to scoop it all the bits and pieces off the bottom of the Atlantic and get a trove of information about Chinese spycraft.
Not an accident by China?
You know,
and does that matter?
I actually probably am more inclined to believe the cock-up theory that, you know, I mean, it's hard to imagine that the Chinese leadership deliberately went out to scupper a visit to China. They needed this visit. You know, I mean, they want to repair damage with their relations with the West. You know, I think we know that China has a balloon program. They float these things off fairly regularly. It's quite possible that, you know, somebody who floats off the balloon didn't get the memo. You're not supposed to do this while Anthony Blinken is packing his bags to come to Beijing. I mean, there are darker theories. You know, maybe somebody did get the memo but decided that they wanted to sabotage the meeting. I don't know. It's not the first time that something insane like this has happened. You know, I was in China in 2011. Robert Gates, then defense secretary, was just about to have a meeting with then President Hu Jintao, and China tested, 2 hours before his meeting, they tested a stealth fighter. This was a really big deal. Looked like a middle finger to Gates. He went ahead with the meeting, gets into the meeting, says to Hu Jintao, basically, what the hell happened? And Hu Jintao looks, you know, completely mystified. Obviously didn't know. Looked at a general who was sitting there and said, well, you know, what's the story? And the general sort of shuffles his feet. I mean, these things happen. This is what happens in a Cold War.
Andy, I'm pretty struck by the comment that you made that this image perfectly represents U.S.-China relations, and we are just, you know, one sort of accident away from a serious escalation. What has you concerned specifically?
Just imagine what would happen if two aircraft collided, a U.S. aircraft and this did happen, by the way, in 2001. Imagine what would happen, you know, if two ships collided at sea. And there are hundreds of military warplanes, naval vessels churning and wheeling around Taiwan, South China Sea, East China Sea, around Japan. And unlike the Cold War between the Soviet Union and the United States, we don't have protocols. We don't have rules of the road for what. I'd be very interested to find out, you know, what messages were going backwards and forwards while this thing was playing out, while the airship was sort of cavorting over Montana. And in fact, this is precisely why Secretary of State Blinken was going to Beijing to talk about guardrails after the two presidents, Xi Jinping and President Biden, met in Bali at the G20, do you remember, at the end of last year, and agreed that, you know, the two sides, and they acknowledged that there was a risk of conflict and they had to avert that possibility. This was what the Blinken visit was all about. And now, not only have we not arrested the downward spiral in relations, but relations have taken another lurch down.
So can Blinken go over there at some point in the future and things get fixed, or?
Yeah, look, I think this is fixable. We'll see. There's going to be an awful lot. There'll be a lot of headlines in the next few days and weeks. They'll be dredging up the bits that they can find from the airship, and you know, look, the Chinese say it was a weathercraft. Okay, you know, I mean, good cover story. No, we'll find out sooner rather. Right. We'll find
or not.
We'll find out sooner rather than later, right? I mean, one way or another. But yes. Both sides, I think, understand the risks, and both are keen to de-escalate. But what really came out of this episode was how much political pressure was on the U.S. president immediately, right off the bat. You know, why aren't you shooting this down? How did you let it float around for so long? You show weakness. You imagine what would happen in a serious crisis. The pressure on both leaders to look tough, not to de-escalate.
So what do you think about next here? in terms of this relationship, or what do we watch out for? We know it's been a tricky relationship, I feel like, now for some time, right? It's always been complicated, but it does feel like it's been less friendly, certainly through the Trump administration, and it feels like Biden has continued a lot of things. So I don't know, what do you have clients, you have people that consult with you?
Our clients are business people, and they're looking at that, and they're obviously disappointed. Look, they've been grappling with a lot over the last 2-3 years with, fallout from China's tacit support for Russia, with COVID zero, with the Nancy Pelosi visit and the aftermath of that. Everybody is saying, my goodness, have we made the wrong bet on China? They have to now look at war plans, scenarios, and this doesn't help.
But here's what struck me last week, Andy. Apple's earnings were miserable, in the words of our own Mark Gurman. One strength, China.
Mm-hmm.
That company is so reliant on China. Disney, Nike, the list certainly goes on. What does it mean for executives who have to do business with the country and in the country?
Well, that's a good question. So Apple is in China, and extricating itself from China is impossible, at least in any near-term time frame. They're trying at the margins, bits and pieces, going down to Vietnam, India, and so on. But yes, businesses have to engage with China. Don't forget, look, China is the engine of the global economy. Last year, it grew 3%. It was 8% in 2021. This year is supposed to grow 5.5%, and Bloomberg economists reckon that is adding the equivalent of a Nigeria. So look, China is an attractive market. You have to be there, but geopolitics is now weighing much, much more on CEO minds than it ever did in the past.
Is there a region of the world? Is it the China seas that we're keeping an eye on? Like, what are you watching geographically that could be the thing that maybe complicates this even more?
Taiwan.
It's Taiwan.
Everybody's looking at Taiwan, and I think that's what comes to mind anytime you have a crisis like this, even a crisis on this scale, and you think to yourself, look, the big one is out there, and that is some kind of miscalculation over Taiwan, and tensions over Taiwan are ratcheting up. We know that Kevin McCarthy is potentially planning a visit there. The new select committee on China apparently is going to hold what they call some kind of field hearing on Taiwan, in Taiwan. And that is precisely the problem, that if you got an accident occurring under those circumstances in that context, it could be really serious.
Because you talk about the pressure on Biden, that if something happens, how much pressure will be on him to react.
And how much pressure on Xi Jinping to react. There is no more important issue for him than Taiwan.
Well, as Tim mentioned coming into you, we really wanted to get you to weigh in on this. I know everybody's been having a lot of fun, but it felt very serious as this story was unfolding. And you really explained why. Andy, thank you.
Thanks for having me.
Always appreciate it. Andy Brown.
Good to see you, Andy.
He's partner at Brunswick Group, joining us in our Interactive Brokers studio on this Monday. Just taking a quick check on stocks. You've got the S&P just down about 0.7%. NASDAQ down about 1.1%. Dow, just call it little change, down about 0.2%. But again, awaiting all the Fed speakers
Off
this
our
week.
worst levels of the day, off our best levels of the day.
All right,
a breather, like you said.
It does feel that way. All right, you are listening and watching Bloomberg Business Week. Coming up a little bit later on, we're going to get into a read on the housing market, also trucking, two great indicators when it comes to the economy. That's coming up on Bloomberg Business Week, right here on Bloomberg Radio.
Developments, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We check the markets all day long here on Bloomberg. Stocks lower across the board. Has been a choppy day, especially for the Dow. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the red, but trading off their session lows. The Dow's currently down 62 points. S&P's dropped 28, and NASDAQ is lower by 130. The U.S. 10-year yield at 3.63%. Gold is little change. Oil trading in the green, and Bitcoin is higher by 0.5%. Among the main 11 S&P sectors, only utilities were in the green, and leaders to the upside in the Dow, Travelers, McDonald's, and Caterpillar, while Intel fell 4% and led to the downside. After earnings, Tyson Foods fell 5%, and on the political front, Biden wants the surcharge on corporate stocks buybacks quadrupled. In other news, U.S. plans a 200% tariff on Russian aluminum as soon as this week. And wrapping things up, Pinterest, Skyworks, and Take-Two. I'll report after the bell. Live from the first breaking news desk, on Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, into here live. Breaking news over your Bloomberg. Type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Bloomberg Business Week is brought to you by Audi. Don't let someone else drive off in the Audi model you've always wanted. Visit your local tri-state Audi dealer to get behind the wheel of yours today, or visit AudiOffers.com for more information.
All right, Tim. So as we mentioned, shares of Bed Bath & Beyond, they're up nearly 40% year to date, still down more than 80% from a high back in August of 2022. It's been often grouped among the meme stocks actively traded by retail investors, and the company has indicated it's getting ready for a potential bankruptcy filing. How it got there and who's to blame, that is the subject of another one of our most read stories on the Bloomberg today.
With more on her story, let's bring in Jeanette Newman, Bloomberg News U.S. luxury, retail, and personal care industries reporter. She's with us right now in our Bloomberg Interactive Brokers studio. So, Jeanette, who is to blame for what's happening at Bed Bath & Beyond?
Well, there are many people to blame is the short answer. And I think, one thing that is to blame is Amazon. But I think Amazon kind of, whenever there's retail bankruptcies, people kind of this is another one bites the dust because of Amazon. And it's much more complicated than that, because obviously there's a lot of retailers out there who are competing against Amazon, and they're doing fine. So Amazon is, somewhat to blame for where Bed Bath & Beyond ended up, but it's a small portion of the blame. And just over the past several years, there's been a series of management missteps and miscalculations that led the company to where it is today. So it's structural forces with Amazon, but also mistakes by managers over the past several years.
Well, talk to us about some of the mistakes, because we've been talking about retail, I feel like, for over a decade in terms of how we got overstored, too many strategies out there, and we've seen fallout. We even just see what's going on here post-pandemic of just so many retail that have whittled down, their stores, their brick and mortar stores. So what specifically, though, in the Bed Bath & Beyond strategy, Jeanette, that they just kind of messed up with?
So they definitely didn't invest enough in online. So that left them kind of, flat-footed competing against Amazon.
Kind of that omni-channel, right? I can go to the store, I can buy online from you guys, and all that good stuff.
Exactly. They didn't do that well. They spent a lot of money buying lots of companies, for example, Buy Buy Baby, Christmas tree shops. They spent a ton of money, billions and billions on share buybacks. That was kind of the previous leadership. Then a new CEO a couple years ago took over. He was the former chief merchant at Target. So it was a really big deal. Mark Tritton, people were really excited about what he was going to do to potentially turn this company around. And in fact, he was not able to turn it around. And long story, hopefully people can read the story, but some of what he did was also double down on share buybacks. So spent $1 billion at a time when the company didn't have necessarily that cash on hand, and also made a pivot to white label or private label brands. And that's something that for a retailer can actually make a lot of sense, because essentially you're cutting out the middleman, right? So it's like you're going to the factory in China and you're sourcing the products.
Doesn't it seem crazy in hindsight? Because it's the kind of store you like. I'm out of candles, or I need some towels, or I need a rug for the bathroom. I go in, bam, do it, go.
Right. And so the private label thing can make sense because there's higher margins, it's more profitable for companies, but they did it at like when the pandemic hit, so they weren't able to effectively source all of their new products from China. And also they ended up doing it at the expense perhaps unintentional, but at the expense of some of these well-known brands that took people to the store for decades. KitchenAid, OXO, all those brands. So now they had all their own new brands that people didn't know, didn't recognize, didn't resonate with the customer, and there wasn't the same availability of the KitchenAids and the OXOs. So customers, then that started the company on a downward spiral, right? Customers go there, they don't see what they want. The company's burning cash. Cash is, their cash pile is starting to dwindle. Suppliers start to get really nervous because they think that they're not going to get paid.
Right.
Suppliers pull back, shelves end up being empty. Starts a vicious cycle where then
Why would someone
there.
go if a shelf is empty?
Yeah. So it's this downward spiral that they got caught in.
And they were known for having the inventory. You could just see it piled up.
It was even more striking, I think, because of it had been kind of like a stack it high and let it fly, is what they would call it in retail back in the day. So I think that was one of the things that also it was just such a stark contrast to what the company had been, and it's been in that downward spiral now for nearly a year. So a downward spiral that's very difficult to get out of.
So how long is this downward spiral, and what could happen? I mean, what could the future of Bed Bath & Beyond look like on the other side? Is there another side?
We have reported that our colleagues on the bankruptcy team have reported that liquidation is possible. So liquidation meaning, a la Barney's, like a Barney's, it doesn't exist. Circuit City doesn't exist anymore. Right. Toys R Us, at least in the U.S., doesn't exist anymore. We have reported that is possible because of the dire financial situation that they're in.
Is there a winner in this that's not?
And I just want to point out, shares of Bed Bath & Beyond have been halted because of volatility. Stock right now is up 120%.
Okay.
Is this meme stock, or is this?
It's a lot of meme stock, and because this bankruptcy process has been, the company itself said, that they are likely, or that they could file for bankruptcy, and so kind of since that's happened, there's been a ton of volatility.
But is there a winner if people can't go to Bed Bath & Beyond or Bye Bye Baby? Is it a company like Target? Is it Amazon? Who could some winners be? Because people need this stuff.
Yeah, I think it's all of the above. I mean, in past retail bankruptcies, there often hasn't been a huge jump at any one retailer. When Circuit City went out of business, it wasn't like Best Buy saw a huge jump, but
because it's a slow decline of something where people have already been going to those places anyway.
Yeah, and sometimes people end up buying less. Like if you buy more because you have a store near you, and if you don't have that store near you, then some of the demand actually just also dissipates. So there's going to be winners, Target, Amazon, but I don't think none of these companies are going to see this huge boost that all of the traffic from Bed Bath is going to go to them.
My apartment's not so happy about this. Okay, so we got a baby on the way. Yeah, we got a baby on the way, so we need Bye Bye Baby. And then my wife really likes Face Values, which is part of the Bed Bath & Beyond umbrella too.
It is. And look, I mean, a lot of people are not very happy. I mean, this was a beloved brand, the famous, 20% coupons that drove a lot of people to the store. And also, there's a lot of, in its heyday in 2017, the company had 65,000 employees. Now it has less than 30,000, but those people's jobs are at risk. We've written about how their severance payments, they haven't received their severance pay. So there's also a lot of workers and employees who are at risk here.
I mean, I do wonder with, the growth of things like Target and other stores and online where it is so easy to get so many of the goods that they offer and get them pretty quickly. Is it just a case we didn't need that model? I'm curious what retail experts have said, that just that model was just not needed anymore, because it was kind of a one-stop shopping for a lot of different things, right?
I think that at least what I have heard and what I have learned is that it's not necessarily that the model wasn't needed, is that the model wasn't well executed. I think there is still space for this model, and in terms of what might happen next, you might see the company might go into bankruptcy, then sometimes companies will buy up the intellectual property and you'll have an online version of Bed Bath & Beyond. That happened with Pier 1, for example. There's no more Pier 1 stores left,
Toys R Us
but there's
too,
a Pier1.com and a Toys R Us.
So of the brand, so how loved is not Bye Bye Baby, is Bed Bath & Beyond, apart from in the Master household?
I think,
Master household notwithstanding.
I think it was one of the biggest home goods. Still is one of the biggest home goods stores in the U.S. So I think that it is quite beloved, and I think that's what creditors in the company right now are trying to hash out. Like how much is it loved, and how much is that going to pay essentially?
How much money do they have before they've got to do something?
I mean, they are actively in bankruptcy talks as we are speaking. They are in bankruptcy. They are in bankruptcy talks. So they've been burning cash for about a year, and in the last quarter, sales fell about 25% year over year. I mean, that's a ton.
All right, we're going to leave it on that note. Jeanette, thank you so much. Jeanette Newman, she is U.S. luxury, retail, and personal care industries reporter at Bloomberg News here in our Interactive Brokers studio. Just want to mention, because our Steve Matthews, who covers the Federal Reserve and regional banks, out with a story just crossed the Bloomberg. Federal Reserve Bank of Atlanta President Raphael Bostic saying that January's strong jobs report raises the possibility that the central bank will need to increase interest rates to a higher peak than policymakers had previously expected.
Are you surprised?
No.
Okay, I'm just wondering. The markets are. We're
Yeah.
seeing stocks move lower as a result.
Yeah, and we've seen yields certainly move up, although we're still kind of with range bound in terms of what we've seen along the yield curve. If a stronger than expected economy persists, this is a quote from Bostic, it'll probably mean we have to do a little more work. He told our Bloomberg News team in a phone interview earlier today. The quote continues, and I would expect that would translate into us raising interest rates more than I projected right now. We know that Bostic reiterated his base case remains for rates to reach 5.1% in line with the median of policymakers' December forecasts, and they stay there throughout 2024. That's when we got the dot plot. We get an update in March.
Well, higher peak could come through an additional quarter-point hike beyond the two that are currently envisioned, he said, while not ruling out a half-point increase. Interesting.
Well, and this is what, there has been a disconnect between what the markets are saying, how high the Fed goes, and what the Fed has repeatedly been saying. So here's Bostic really throwing some fire. We'll see what Jay Powell, the chair, has to tell David Rubenstein tomorrow in that Bloomberg exclusive.
Well, that'll be in Washington, D.C. Let's stay in Washington, D.C. for a check on the latest world and national news with Nancy Lyons, who's in her 99.1 newsroom in the nation's capital. Hey, Nance.
Thanks, Tim. President Biden is coming under criticism from Republicans for his handling of that wayward Chinese spy balloon. They say the president should have shot it down sooner. It was eventually shot down when it was over the Atlantic. But Bloomberg's Nick Wadham says the incident was not reported to the president until it was already over the U.S.
Once it became clear that this was an unusual situation, the balloon was lingering a lot longer than past balloons had and was also hovering over some sensitive military sites, particularly those Minuteman III silos in Montana. That's when it went up to the president.
Bloomberg's Nick Wadham's White House National Security Advisor Jake Sullivan said today improvements that were ordered by President Biden in the way they handled Chinese espionage actually helped identify the balloon. He also says there were multiple instances of Chinese surveillance balloons over U.S. territory during the Trump administration. Turkey's president is calling it the worst disaster for his country in a century. More than 2,800 people now are dead in southern Turkey and northern Syria after two earthquakes struck within hours of one another, both at least magnitude 7.5. Bloomberg's owner Ant reports Turkish authorities have halted oil flows from near the epicenter just as a precaution.
The area is home to pipelines that carries crude oil from Azerbaijan and from northern Iraq to Turkey's export terminal in Ceyhan on the Mediterranean coast.
Bloomberg's owner Ant reports cold weather in the region could hamper the rescue. Turkish officials say they hope to restore gas flows within the next 48 hours. A controlled release of toxic chemicals is taking place at this hour in East Palestine, Ohio, where a train derailed Friday. The wreckage has been smoldering for days, and there is a fear that the hazardous chemicals on board several of the cars could explode and send toxic fumes and shrapnel into the air. Global news powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. I'm Charlie Pellet. We've got 19 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all in the red right now with a 25-point drop for the S&P 500 index, down by about 0.6%. The Dow down 44, lower by 0.1%, but a full percentage point drop now for NASDAQ, down 1%, lower by 123 points to 11,883. The 10-year yield, 3.63%. The 2-year, 4.45%. Gold up 0.1%, $18.67 the ounce. While West Texas Intermediate crude is up 1.4%, $74.39 a barrel. Stocks have given back some of this year's gains, with traders waiting to see if Jay Powell will dampen the bullish reaction to his recent remarks amid bets that the Fed will keep its firm grip on policy. An Atlanta Fed President Raphael Bostic says there's a, quote, good chance that the U.S. does avoid a recession, but he also said the jobs data raises the possibility of a higher peak rate. His remarks came in an interview with Bloomberg News. Well, as for the overall earnings backdrop, Kathy Entwistle is managing director at Morgan Stanley. She was interviewed this morning on Bloomberg Radio.
It seems like corporations have had the opportunity to kick the can a few times on earnings and show more positive earnings than we were expecting. But at some point, that's going to come undone, and they're going to have to look at, borrowing costs have gone higher for them. They're not able to, bring in as many profits as they were, and at some points, that number is going to have to change.
Lots of earnings after the close of trading today. Among the names we'll be hearing from, Take-Two Interactive. Take-Two shares down 3.4%. Rival Activision Blizzard down now by 4.5%. We'll also be hearing from Simon Property Group down 0.6%. Pinterest up by 1.5%. And also reporting after the close of trading today, Rambus shares down by 1.5%. Again, recapping stocks lower, S&P down 0.7, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. If your business was hurt by COVID, it may qualify for a payroll tax refund. Even if you took PPP, your business may still be able to claim the Employment Retention Credit. See if your business qualifies for ERC assistance at getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 16 and a half minutes left in today's trading session. We're bouncing around off our highs and lows, but we are right across the board, as you heard from Charlie, down the most when it comes to the NASDAQ, down about 1%.
It's very good to have back with us Amanda Gotti, Chief Investment Officer at PNC Asset Management Group, joining us via Zoom in Philadelphia. Amanda, how are you?
I'm doing great. How are you doing?
We're doing okay, trying to figure out what the Fed is saying, what Jay Powell is going to say tomorrow, what a very much hotter than expected jobs report on Friday says about the Fed's path. What are you looking at?
Well, it certainly is challenging to make sense of the market madness. That's how I'm sort of describing it these days. We've also been describing this market as being a little bit delusional, a little bit deranged, perhaps even unhinged, all with dramatic effect. But I think really at the end of the day, what we're seeing in terms of leadership to start off this year really does not align with the outlook. It's the same outlook that was in place last year. And at the end of the day here, the Fed is still firmly in the driver's seat. So a really significant disconnect in terms of market action.
That's so interesting that you say that, because a listener got in touch and sent me the Bed Bath & Beyond price action today, which at one point was up triple digits and now is up 90%. And I'm thinking to myself, this is like 2021 all over again. What do you think?
Yeah, so I think investors are really conditioned to everything moving at warp speed. We've been in a high volatility regime since the onset of the pandemic, and I think investors would just like this whole Fed tightening cycle to be over with at warp speed. And so that's why we keep saying market's very much fighting the Fed on this, but it's a longer for longer dynamic here in play, especially with what we're seeing around inflation drivers being pretty sticky, and certainly what we're seeing in that red hot jobs report, potentially more rate hikes ahead, a higher terminal rate, just a longer overall tightening cycle. And so I think that's really where we're going to start to see some potential disconnects in terms of this market price action.
Amanda,
it's just too soon to claim victory.
Our Steve Matthews caught up with the president of the Federal Reserve Bank of Atlanta, Raphael Bostic, who said that the strong jobs report for January raises the possibility that the central bank will need to increase interest rates to a higher peak than policymakers had previously expected. And just talking about doing a little more work, he doesn't vote on policy this year, but he said officials need to understand if the jobs report was an anomalous reading, in which case he would be inclined to look through this a bit, but said that the committee could also consider moving back to a 50 basis point hike if needed to, though that's not his expectation. And he supported last week's downshift in rates. A lot of ifs and buts were candy nuts kind of a thing. There's just so many different scenarios that we could see. So at this point, how do you value the market? Are we fairly valued? Are we still overvalued? Are we a little undervalued in some areas?
Well, I would say in general, we're still sitting at overvalued levels. There's no question that we're in a better place to start this year than we were last year. That feels like an understatement, but we're certainly not priced at recessionary valuation levels. In fact, as we're seeing earnings growth start to come down as a function of Q4 earnings season, we're actually seeing this paradox of multiples expanding. So 18 times a forward P on the S&P 500, nowhere near priced at recessionary valuation level. So we think there is probably another 10 to 15% downside here, especially if the Fed keeps going.
Wait, are you though, is that only if we get a recession or even no?
Well, I would say it's sort of one and the same. So there's never really been a tightening cycle in history on the part of the Fed where they've raised rates to, well, I guess it's 5.1% or higher as a function of the dot plot and the terminal rate without tipping us into recession. So my view and PNC's view is if we go that far or even higher, the recession becomes a foregone conclusion. So I think both of those catalyze a bit of a downdraft here over the next few months.
So you say a 10 to 15% decline from where we are in the S&P 500 right now.
Yeah,
that's your base case.
Well, considering how far we've moved to start the year, that's probably a little light in terms of downside, but that's basically what we think could happen. What's interesting though is I think it could be somewhat short-lived, is if we do get that eventual Fed pause. Even if we don't get a cut, I think there's a lot of power in a Fed pause. That could add back a couple of valuation multiple points seemingly overnight. So it could be a very interesting returns profile for this year. Choppy down first half and then a bounce in the second half. We might eke out positive returns for the year, but that's a huge if, and a lot of variables have to come together for that to play out.
I just want to go back to this story that's on the Bloomberg terminal by our own Steve Matthews, who follows the Fed. He's a Bloomberg News economics reporter, and he caught up, and the Bloomberg News team caught up with the Federal Reserve Bank of Atlanta President Raphael Bostic. I mean, another thing, Amanda, that Steve got from Bostic is that he expected inflation to be in the low threes this year, still well above the Fed's 2% target, requiring rates to be higher for longer. But low threes, I mean, that gets to feel more normal, right, historically.
Oh, absolutely. If you think about the 10 plus years leading up to the onset of the pandemic, we undershot in a big way in the inflation target. So I think there's definitely a period of time here where the pendulum can swing and stay, not at current levels, but certainly stay at a more elevated level of inflation relative to that target. And by the way, that three kind of handle on inflation scenario is actually really good for earnings growth and for valuation multiple expansion. So we think the backdrop can handle that very well. I actually think landing there is probably better than hammering away at this and trying to get to that 2% target.
You said that was really good for earnings growth, and what else?
Valuation multiple expansion.
Okay, so that would be a much better level to be at. Really great analysis, and so great to be able to kind of get your reaction to what Raphael Bostic had to say to our Steve Matthews. Amanda Gotti, thank you, Chief Investment Officer at PNC Asset Management Group, joining us via Zoom in Philadelphia. Bouncing around here, we're going to soon catch up with our TV colleagues, talk a little bit about the trade right here on Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:53 now on Wall Street. 7 minutes to go ahead of the closing bell. FAA regulators are accusing United Airlines of skipping safety checks on more than 102,000 flights in recent years. Let's get more on that story now from Bloomberg's John Tucker.
Charlie, the Federal Aviation Administration says United removed the pre-flight fire system warning check on its fleet of Boeing 777s in June of 2018 and continued to operate the planes without it until April 2021. Such a large proposed penalty by the FAA against a major airline is highly unusual in recent years because the agency has adopted a system encouraging carriers to report their own errors in exchange for not seeking fines. United has 30 days to appeal the penalty. Charlie?
Thank you. That's Bloomberg's John Tucker. Could be a $1.1 million fine. UAL shares down now by 0.5%. AMC Entertainment Holdings will increase the price of theater tickets for the seats that filmgoers covet the most, and that is the middle of the middle row. The world's largest theater chain is experimenting with a tiered pricing structure based on seat location. We have got AMC shares surging on that word today. AMC now up by about 12.4%. Lots of companies scheduled to report after the close of trading. Among them, Take-Two Interactive Software, Activision Blizzard. We've got Simon Property Group up after the close of trading, along with Pinterest. Those are the company stories we're following. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just about 4.5 minutes, and we will get into the close of the markets here and some earnings. We're going to head over to our TV team in just a moment. In the meantime, a few stories. One in particular we wanted to bring to your attention has to do with a ransomware blitz. More than 2,100 computers around the world were infected over the weekend with ransomware that exploited a 2-year-old vulnerability in server software made by VMware, according to cybersecurity researchers and authorities.
The infected machines represent a fraction of the more than 66,000 internet-connected computers that could be potential targets. This according to the founder and CEO of Onif, a French cybersecurity firm that scanned the internet for fingerprints of the attacker's code in the wild. Cybersecurity agencies in France, Italy, Canada, and other countries publish advisories disclosing the attacks and urged organizations using the vulnerable software to fix it.
Hey, I just wanted to mention a couple of our most read stories in the past 60 minutes. Number one is that story by our Steve Matthews about the Federal Reserve Bank of Atlanta President Raphael Bostic saying January strong reports, jobs report raises the possibility that the Fed will need to increase interest rates to a higher peak ultimately than policymakers had previously expected. So I highly recommend it is a Bloomberg exclusive. Check it out at Bloomberg.com or on the Bloomberg terminal. The other story has to do with Wall Street traders shunning risky bets before that conversation that David Rubenstein of Carlyle, and of course a Bloomberg colleague here, as he does a broadcast for TV and radio, he's going to sit down, David Rubenstein, with the chair of the U.S. Central Bank, the Federal Reserve, Jay Powell, tomorrow.
Yeah, we're looking forward to that conversation, Carol. We're also seeing right now mega cap stocks, Apple, Amazon, Alphabet, Microsoft, and more. We're seeing a rout there getting hit pretty hard ahead of that meeting tomorrow.
Which makes sense, right? We've often seen this when there's concerns about higher rates or the Fed going higher for longer. That really plays into the valuations. As we just talked with Amanda Gotti, she talked about that if we could get inflation and the Fed's target rate, basically down to about 3%, that's much better for valuations, generally speaking, and for earnings growth.
She was so bearish.
Yeah, she was pretty bearish. Yeah, I mean, we just don't quite know how it plays out. Yeah. And, if that jobs report we got for January was an anomaly, then maybe we won't have such an aggressive Fed. But again, there's just a lot of questions about what happens next. Right now, we're going to help answer some of those questions. Head over to our TV colleagues. Count you down to the close on this Monday. Beyond the Bell. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Scarlet Fu, counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Carol Masser and Tim Stenevec. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, as well as for those folks streaming on YouTube. A market down here on the day. You add that to the losses, Carol, that we saw on Friday here. You have a market that's pulling back. An interesting note making the rounds right now. JP Morgan strategist Marko Kolanovic saying, well, investors should fade last week's rally, and apparently they're doing just that.
Well, and what's interesting is we've got both bonds and stocks down in terms of the prices, but if you take a look at that 2-year yield, it's just moving up here in the last few minutes of trading here. So we're seeing kind of a bearish tone when it comes to rates, and I've got to wonder, you had that Steve Matthews story talking about Raphael Bostic saying that we could see a higher peak rate ultimately because of that strong January jobs report. Investors are definitely getting a little bit more bearish about the rate environment.
Yeah, well, speaking of bearish, we just had a really interesting conversation with Amanda Gotti. She's Chief Investment Officer over at PNC Asset Management Group. Here's what she said. We've been describing the market as delusional, deranged, and unhinged. Wow. At the end of the day, what we're seeing with leadership does not align with our outlook. She says, base case, a 10 to 15% downside from here on the S&P 500.
Because we're overvalued, she said, on the market.
10 to 15%, so that puts us down, what, like 36,
All the notes coming in right now
Back to where we were in October, December.
All the notes right now strike a very similar tone. This idea that stocks, after the big run-up, have pretty much priced in everything they could on the good side, on to the upside, and now now it's time to face reality.
Well, maybe that's what we're getting right now. We talk about an S&P 500 that on Thursday, at least on an intraday basis, came within a whisper of about, what is it, like 4,200 here, peeling back by about 1% on Friday. And here on this Monday afternoon, it's going to close lower by about 0.6%, down roughly 25 points as we wait for the numbers to settle. Dow Jones Industrial Average lower by about 0.1%. The NASDAQ Composite moving down by about 1%. And the Russell 2000, that's your relative laggard here, down on the day, Carol, by 1.4%.
Yeah, a little bit deeper into the S&P 500. So see what we saw, and most names, Scarlett, about 348 in that index, closing lower for this Monday trade, 155 higher. So definitely a more of a risk-off trade here.
Absolutely. And if you go into the 24 industry groups in the S&P 500, look at the bottom, and those are your growth kinds of stocks, media and entertainment, telecommunication services, which includes a lot of those tech names, semiconductors. That is dropping for the day, and it's an extension of the losses that we saw on Friday. On the upside, you do have Tesla lifting the auto group overall, and utilities has been a consistent outperformer all day long, up 0.9%, even as they got sold off on Friday after the big jobs report.
Yeah, absolutely, and that's one of my gainers in today's session, and I just want to go through them quickly. It feels like you had to be either an M&A target potentially, or you had to have AI connected with your name to gain in this session. So Catalent, this was top in the S&P 500, up about 20% by the end of today's trading session, jumping following a Bloomberg report that life sciences company Danaher is said to be interested in the business, valuing the target at a significant premium, although we don't have the deals. Keep in mind, it's unclear how much this will move forward or whether Catalent is receptive to the offer, according to those in the know. So just something to keep in mind, but definitely a standout in terms of performance. Scarlett, you mentioned Tesla. It finished up about 2.5%. It's up for a fifth straight session. Again, it's really been on a move to the upside. The company raising the prices of its Model Y SUV in the U.S. That happened on late Friday. Also late Friday, I was here in the office still when that verdict came in. Elon Musk cleared by a federal jury on a suit about defrauding investors. That stock now up about 60% in 2023. And one last one, I mentioned AI. It was a good thing to have anything related with AI today, because you did see SoundHound AI. That stock was up about 43% in today's session.
And just real quick, I'll add one to that. The Bed Bath & Beyond finishing out the day, guys, up 92%. This is for a stock that is probably just so volatile. Believe it or not, this was still the biggest one-day gain we've seen on there. Volume up by more than 700%.
Okay, so
it was no news, by the way.
So that's what I was going to ask you, Romaine. I mean,
so is that the derangement? Is that the delusional?
That's exactly what I referred to when Amanda Gotti was talking about.
I heard you had cupcakes on Friday.
We did, yeah.
Did you leave some for me?
Pink and blue.
I don't know
They'd
if they're
be stale by now, but we didn't know whether it would be pink or blue.
They're still good. Trust me. Ask me how I know.
Do we have losers today?
We do have some decliners. Big tech taking a hit today. I don't know if I want to call them big tech. I'm just going to call them mega caps, okay? Mega caps taking a hit. Apple finishing it down by 1.8%. Despite the miserable earnings, that's Mark Gurman's description, late Thursday, Romaine, Apple shares actually closed higher by more than 2% on Friday, giving back some of those, down 1.8%. Alphabet finishing it down by 1.8%. And then VF Corp, tomorrow we get earnings down 6.4% today.
All right, let's get to Skyworks. They are crossing. This is a big Apple supplier. Most of their revenue comes from Apple specifically. Here's one of the headlines. The company announcing a $2 billion share buyback. That often gets the stock moving. That is a new stock repurchase program. So we're continuing to look for some headlines with earnings. But keep in mind, this is a semiconductor company for mobile communication. It's up about 21% so far here in 2023, just up about 0.2 in the aftermarket. But we're just waiting, Tim, for some of those earnings numbers to come out.
Yeah, I'm still looking for Pinterest shares as well, given what we saw last week with Meta Platforms, a year of efficiency. I'm going to be looking for that company and commentary about how it continues to compete with increasingly, Romaine, not just the big social media players, but Amazon as well.
It'd be interesting to see, and of course you're going to get some video game companies too, Activision, Blizzard, and as well as Take-Two. Let's get a quick check here on the yields, because before we get to more earnings here, because this was a massive day. We're up 19 basis points right now on your 2-year yield here. You add that, of course, to what
and
we
it's
saw
still going up, by the way.
Friday. We're talking about something like a 40 basis points almost right now on the 2-year yield. If that's not a repricing of Fed expectations, I don't know what is. A lot of activity in the belly of the curve. Your 5-year yield up 17 basis points. Your 10-year up about 11 here. The fact that you're seeing that so lopsided to the front end and, of course, into the belly, that is a Fed repricing of now a market that just seems to now believe that maybe this isn't it. 475 isn't it. 5.1 isn't it. The question is, how high do we go, guys? And more importantly, how long does the Fed keep it there?
Well, I want to go back to earnings because Skyworks coming out with their numbers. This stock is shooting up in the aftermarket, up about 3.7% as we speak. First quarter revenue, $1.33 billion, slightly better than what Wall Street was forecasting of $1.32. First quarter adjusted operating income, $491.3 million. That too was a beat compared with $487.9 billion. So there was expectations that this would maybe be disappointing, but right now investors sending it higher, Romaine.
Activision Blizzard shares crossing the wire right now as well. The headline number coming in with 4Q net bookings at $3.57 billion. The street was looking for $3 billion, so that's a beat on that main metric here. Going forward, and we should point out adjusted EPS at $1.87 versus a street estimate of $1.52. But here is your forecast. The company sees 2023 net bookings up at least in the high single digits year over year, and sees 1Q net bookings growth at least in the mid-teens here. We have to sort of look at how that compares with some of the estimates here. Not a whole lot of activity in the shares right now. Remember, of course, this is an acquisition play as we wait to see whether Microsoft is able to follow through on that $69 billion purchase of this company.
All right, let's also take a look at Take-Two Interactive, which, judging by the numbers it just reported, is likely falling in the after-hours trading. And there we have it. Third quarter numbers, missing analyst estimates, whether it's net bookings, whether it's adjusted EBITDA, whether it is adjusted earnings overall, and the outlook also disappointing too. For instance, fourth quarter adjusted EPS of 60 to 70 cents. Analysts were looking for $1.03. Take-Two also sees full year net bookings of anywhere from $5.2 to $5.25 billion, whereas it had previously expected up to $5.5 billion. So the takeaway here from Take-Two Interactive is that things are going to be a lot slower, and in fact, the company is in cost-cutting mode, saying that it sees $50 million in annualized savings from its cost-cutting program.
Yeah, I want to go to Pinterest because shares are just falling in the after hours right now, down 11.5%. The company reported revenue for the fourth quarter that missed the average analyst estimates. Revenue kind of coming in line, 877.2 versus an estimate of 887.2. You're seeing EPS remain of 3 cents right now. Average revenue per user, though, coming in below estimates at $1.96. Estimates were for $1.98.
It's interesting, too. I mean, when we talk about the idea here of what's the growth story, both in terms of users as well as ad growth here, we already got a peek out of that with Snap and, of course, with the big companies like Meta and Google here. I'm not sure what the growth story is here, and we should point out they also announced a stock buyback, only $500 million and not having much of an impact.
Does ChatGPT make Pinterest less relevant?
I don't know.
Or maybe not ChatGPT, but generative AI, because you're using simple prompts to create art, to create text. I mean, Pinterest is all about...
We should point out the CFO of the company also departing the company. Todd Morgenfeld, the CFO of Pinterest, leaving the company. That's the other headline coming out of this company right now. So a lot going on. One of the biggest decliners right here in after-hours trading, Pinterest down 15%. That's not the biggest decliner, though, in after-hours trading. That belongs to Chegg, down about 17%. This is the online education company, and this appears to have to do with a big revenue miss, particularly with regards to the forward guidance. 2023 revenue guidance coming in at 745 to 760 million. The street was looking for 820. So a pretty big differential there between what the street was looking for and what the company is guiding to.
Not much commentary that I find in the press release from Dan Rosenswag over at Chegg. He does say the last several years have been very challenging for everyone. He says we're excited about the next chapter for Chegg, though I should note the company has been under significant pressure.
And some of that because of ChatGPT.
Exactly.
And AI.
AI, the concerns there.
It's everything.
Also out, and that's
Is this all we're going to be talking about this year? So last year was all Jay
It's the year of AI.
Today is AI.
Romaine.ai.
Yeah. Has Elon Musk announced his AI initiative yet?
Wait for it. Just wait for it.
Did you not see the white robot thing, the human robot?
Yeah, that was interesting when he put the guy inside the suit.
His car is his
A
AI.
lot of stocks moving in the after hours. We will continue.
I love that guy, by the way.
The robot?
I think we have to go.
We got to go. All right, that's a wrap. Our cross-platform
Good job
coverage,
today,
radio,
John.
TV,
I hope to see you
YouTube, and
tomorrow.
Bloomberg Quick Take. I hear nothing. We will see you again, same time, same place tomorrow.
Well, it is Bloomberg Business Week. Carol Masser and Tim Stenovec. Well, the rival of Peloton, Zwift, has bet on hardcore racing in your living room. The exercise app has a loyal following among esport racing competitions, avid cyclists, and investors. including me. So I wanted to sit down with co-founder Eric Min, but we didn't sit down. We actually went for a ride together in the metaverse. He's a former JP Morgan and Chase vice president. He's looking to increase its subscriber base from about 1 million to 10 million. 80% of them right now are men, and he wants to take the company public. Check out a little bit of our conversation.
There you are. Now I got to catch you. I'm chasing you now. Where's the sprint? That's what I'm waiting for. Yeah, you left me in the dust there. When it comes to indoor cycling, pretty much everybody's heard of Peloton. But Zwift is what a lot of the serious cyclists use when they're just not able to ride outside. Here's how it works. A smart trainer connects to apps and it can adjust to make it harder, like if you're going up a hill. One of those apps is Zwift. It helps you exercise, but it's also a game. You're pedaling your bike in the real world, but you have this avatar. I wanted to learn more about Zwift, and I thought there was no better way to do that than to go for a ride with the company's CEO. I'm in New York City. You're in Long Beach right now. We're, what, 3,000 miles away, but we're actually riding together on screen. Is this the metaverse to you?
Absolutely. It's the metaverse. It's a virtual space where people come together, they engage, they build communities. If you look at the clubs that we have well over 20,000 clubs. It's really interesting, and the power of the community is, I think, unique to Zwift.
How do you develop courses? What's the process there?
We have a fantastic creative team, and what we've learned that over the years, these magical places like Watopia and now Makuri Islands are the kind of maps that our community would like to spend more of their time on. And that's partly because we can do crazy things, right? We can create tunnels under the water in the seabed. We can create roads above Manhattan. There are other people who can try to replicate and be more of a simulator. We want to be our own thing, and I think we can enhance what the real world is and just make it much more interesting. Do things that you otherwise can't do.
We see a lot of companies raising prices right now because of inflation. Am I correct in thinking that you guys have not raised prices?
We did raise prices 5 years ago, but we have not done so since then. But let's be honest, the cost of running our business has gotten more expensive. It's been really tough. The supply chain issues are real. We are trying to run a business that is profitable at some point. It's not at the moment. We're really focused on trying to onboard as many customers as possible and trying to make the pricing accessible.
You've raised over $500 million. Your investors want to see a return. What's the exit for them?
I think we all have aspirations of taking this company public. There's no doubt about it. Our investors have invested in this business because they think we will be the category leader. And we believe we can do that through product.
Take us into the decision to launch Hand Cycles and tell me about the reception and what you've heard.
Back in September, we finally launched the Hand Cycle. It's available to everyone, but those who are using it are really those who are disabled. This is really about, living up to our values, which is about diversity and inclusivity. We have some responsibility in making sure we make those investments.
What's the breakdown of Zwift, male versus female?
It's 80% men, 20% women. So there's a lot of work to be done there. And this is why the sponsorship of the Women's Tour de France is so important for us.
Take me through the ROI on that. How does that translate into more people, paying $15 a month for Zwift?
If you're going to sponsor a bike race, you sponsor the Tour de France. So when the opportunity came up for us to really help support and relaunch the Women's Tour de France, we jumped at it. We'll have to find a sprint to do.
That was fast. I feel so bad. I'm throwing my colleague my sweaty towel. You used to work at a bank.
Yes.
Now you ride bikes all day.
I started my career on Wall Street many years ago. One of the inspirations for starting Zwift was to recreate my community, my experience, the competition, the training that I had in Central Park.
What does Zwift look like 3 to 5 years from now?
I think there will be a convergence. It's our job to make the interplay between indoor and outdoor as seamless as possible, so that what's not lost in that interplay is the social connection and the ability to share experiences. I think that is a big unlock for how we can really contribute to the cycling industry.
I've never done anything like this before in terms of interviews.
You know, I've not done this before either, but I'm told that there are some tech leaders who, on a monthly basis, get on Zwift and have their catch-up calls. I think they find it amusing to be able to do some exercise at the same time.
All right, Eric, I'm going to catch you.
Oh, here we go. Okay, that's enough for me. That's my workout for today.
Virtual high five.
That was great.
Thanks, Eric.
Awesome. Thanks, Tim. Let's do it again.
Yeah, let's do it again. I would love to.
Okay, so that was me. I'm a little out of breath. If you're just joining us, that was an interview that I did with Eric Min. He's the co-founder, co-CEO, and chairman of Zwift. It's this indoor cycling platform that's meant for, you know, serious cyclist racers, and we're racing on these pieces of hardware called direct drive trainers. We rode for an hour, even though that interview was only 5 minutes. That what it cut down to. We did about 25 miles, which we went pretty fast, Carol.
So even though you guys were
I was out of breath. So was I.
You both were.
Yeah. Thank you. Thank you.
Well, listen, you were doing a lot, and you were talking, and there's a lot going on. I mean, so the whole idea is you can be anywhere, and the two of you are on the road racing against one another together.
Exactly. I mean, it uses technology, these trainers that are connected to Bluetooth, and you can use a tablet, a smartphone, or a PC, or an Apple TV. We were using Apple TVs in that case. One area where the company has struggled is onboarding users. It's a little complicated, I think. And I mean, indeed, even...
What does that mean?
So getting new users on the platform.
Oh, okay.
You know, so it's, like I said, it's the serious cyclists know about this, but, you know, you need this kind of expensive piece of hardware that historically has been, you know, could be up to $1,000.
I mean, the bike itself.
The bike, separate from the bike, you need this trainer, this smart trainer, this Bluetooth-enabled trainer. So the company has come out with a $500, what they call the Amazon Basics of smart trainers. And I tried it out for this piece. And Eric told me they're not making any money on it, but the whole idea is to make the onboarding process easier. So everything that you need to start Zwifting comes in the box, like a free trial membership. It's easy to set up. I did the whole thing. It was really easy to set up. The big question is can they get to that growth that he's eyeing?
I mean, was it fun?
It was super fun.
I mean, you're someone who goes out on the road and cycles with a team, and
I do, and but I do less and less now that, you know, I have a young kid.
Right.
So the majority of my cycling now is actually on this platform.
You are doing it.
Yeah, because it's efficient. You can get it done in an hour.
Interesting. So you'll continue using it?
I'll continue using it. It's $15 a month.
Yeah.
He did tell me, and I wrote an article about this as well, that the $15 a month, they haven't raised that price in 5 years. So he said it wasn't sustainable. So I think there's going to be some price increases at some point. So.
I think it's interesting, and I agree with you. Like, you've got to broaden out your audience, right? In terms of getting more users even on the platform.
Yeah, how do they do that? That's the question.
Fascinating.
Thank you.
If you missed it, what a cool piece. So interesting. And you can find it on the Bloomberg, on our Quick Take streaming service.
Bloomberg.com/QuickTake. It's on our Twitter feed as well.
It's everywhere. Check it out. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. Earnings fast and furious after the close of trading. Just heard from Spirit Air in the process of being acquired by JetBlue. It reported adjusted EPS for the fourth quarter that beat the average analyst estimate. After ours, we have got Spirit flying high now by just about 8.4%. The social networking website Pinterest reported revenue for the fourth quarter that missed the average analyst estimate. Revenue, $877.2 million. Estimates there, $887.2 million. Pinterest after ours plunging by 10%. Also reporting Take-Two Interactive Software, that's the video game publisher known for the best-selling franchises Grand Theft Auto and Red Dead Redemption. It cut its outlook for bookings down by 2.4% after ours. Also reporting another video game publisher, Activision Blizzard. It reported net bookings for the fourth quarter that beat the average analyst estimate, but after ours, Activision down by about 5.3%. Turned out to be a down day for the Dow, the S&P, and NASDAQ. Stocks giving back some of this year's gains. Traders waiting to see if Fed Chair Jay Powell will dampen the bullish reaction to his recent remarks. There will be an interview tomorrow with Powell. S&P today down 25, drop there of 0.6%. The Dow down 35 points, down 0.1%. NASDAQ down 119, a drop there of 1%. 10-year yield 3.64%. The 2-year 4.47%. Spot gold up 0.1%, $18.67 the ounce. West Texas Intermediate crude up 1.4%, $74.43 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could be missing out on an opportunity to claim the Employee Retention Credit. Innovation Refunds has helped thousands of small and medium-sized businesses claim over $3 billion in ERC refunds and may be able to help yours too. Learn more at getrefunds.com.
All right, so we got a great read on the economy and an important part of our economy, and that is the group that kind of moves everything around. We did it in December. We wanted to have our next guest back for an update, and we're talking about the trucking industry.
Yeah, very pleased to have back with us once again, Melissa Foreman, president at TriumphPay, joining us via Zoom from Dallas, Texas. To remind everyone, TriumphPay is a payment platform. What it does is it connects brokers, shippers, and carriers. It's a division of TBK Bank, SSB, member FDIC, and part of the publicly traded Triumph Financial. We've got about $1.5 billion market cap. Melissa, good to have you with us. How are you?
I'm good, Carol and Tim. How are you guys? Thank you for having me back.
We're doing pretty well. So we last spoke to you toward the end of the year last year, and I'm just wondering how things are going now and how things have changed since then.
Yeah, I think, what we talked about last time is that we didn't see the seasonal peak that we typically do in October, November, December into the holidays, and things kind of were starting to hit a bottom. What we've seen on our side in that time frame, through the beginning of January and into December, is it's starting to feel like it's flattening a little bit. So the average invoice prices seem to stabilize. And so we hope, we don't have a crystal ball, but we hope that it will hold fast and we'll start seeing things pick back up here in the next month or two.
But down from a year ago? Like, how is the best metric here? I always feel like because of the pandemic, everything is so a little bit foggy. So do you compare it to pre-pandemic levels, kind of where we are?
We do. So yes, when you look at pre-pandemic levels, and I can't quote exactly, this week where they're at, but what an average invoice price for a spot market over the road truckers invoice would be around $1,600. So now we're seeing that right around $2,050, which is far better than what we saw pre-pandemic, but certainly not as good as the peaks that we hit a year or so ago when it was hitting 2,600. So it feels like it's rough. But again, what we have to remember is what's changed since pre-pandemic is the cost of fuel, the cost of equipment, the cost of financing with the Fed rate increases and all those hikes and how they impact drivers' ability to operate their business. So it has become more expensive for them to operate their business than it was pre-pandemic. And so, I certainly can't imagine that we could get much lower than the $2, $2 per per mile for a driver or carrier to even be able to operate.
What about when it comes to supply of drivers and carriers? Is it still difficult? Are you still having trouble finding people?
There are, and a lot of that, the reasons differ, right, from season to season and what's happening in the industry. And right now there's a lot of drivers that are saying, I'm going to park my truck. I'm not going to operate at a loss. And so they're able to park it, put it on the fence, and go do something else while they wait it out. And so you see a lot of authorities coming out of the market. And then as soon as things pick back up, you'll start to see them come back in.
Melissa,
right?
that sounds inflationary
reauthorize.
to me. That sounds exactly like what the Fed is worried about.
It is.
So how much more would people have to pay in order to get these drivers off the sidelines? And how do we see those higher payments actually trickle into the economy in terms of higher prices for us, which, again, is what the Fed is worried about?
Yeah, absolutely. So, when you look at their cost to operate, trucking companies historically have made, a 10 to 15, 18 on a good year % margin. Right now they're running at 0 or 3 to 5% margins for the smaller guys. And so we just need them to be able to make money again, right? They need to be able to be profitable. They need to be able to operate their businesses. And so all the inflationary cost increases for equipment and fuel, et cetera, is really what's causing them to have these issues. And so how do we fix that, right? We've got to get the cost of fuel down.
How do you make money on, if you're getting $2 per mile, your operational costs? How does a trucker make money? Help me understand the math here.
Yeah, I mean, the majority of that is going towards fuel and the equipment and the cost of the driver's, salary. And so it's difficult. Again, like right now is, 3, 5, 8% margins are a push. And so it's difficult to make money. And that's why you see a lot of carriers coming out.
I want to talk autonomous trucks with you once again. We're not seeing them on the roads, despite the fact that Tesla... Well, we do see, a couple of those, but they're not widespread by any means right now. How do you think about autonomous trucks in your work, and to what extent should we think about them as consumers, and should drivers think about being replaced?
Yeah, again, as I said last time, we're a long ways out before.
No difference in 2 months?
No difference. I don't think we're anywhere close to having drivers on the road or autonomous trucks on the road without drivers and they're controlling them. There are certainly applications for point-to-point pickups, such in ports and such, where you can have equipment do that, but that's because you don't have the variables of the open road. Our drivers are phenomenal at navigating our interstates, our infrastructure in the state that it's in, and dealing with other people and anomalies that they face with, a 52-foot trailer behind them that's fully loaded. And so will there be an application someday that allows us to alleviate a driver shortage? Yes, but then it's going to create other opportunities. Somebody's going to be, and I imagine, behind a joystick on a computer game, helping navigate these trucks through the city. And it's just going to change the way we see things, but I don't see it taking trucks off the road completely.
Yeah, it's one of the themes we talked, robotic, right? Trucking specifically with Amazon, with Kathy Wood recently. Hey, what you are seeing, Melissa, from truckers, what does it tell you about the economy right now? Is it a little bit up in the air? Is the glass more half full? Is the glass more half empty?
Well, I think I saw the report that GDP was up a little bit in the last report. We do see, folks have shifted their spending to more experiences than consumer products. Again, we talked about that a couple months ago, and I feel like it feels to me that it's stabilizing. We're starting to see some, orders go up a little bit to bring product across, import products into our warehouses. And so you're starting to see some signs of that coming back. But I think it's too early to tell right now as to how deep we're going to go or when it's going to turn that corner.
But you say recession.
Feels that way.
Okay.
Okay, so what about the question sort of a different way when it comes to just inflation? Because speaking to you and understanding the shortages, understanding the drivers are going on the sidelines because they can't make money, do you feel like the Fed And I know we're not talking, Federal Reserve policy here, but that's what we talked about last week. So do you feel like the Fed is I don't want to ask you if they're making the right decision, but does it seem like to you inflation is coming down?
I could not answer that question, Tim. I don't know enough about the financing side of it and how all those levers that can be pulled affect.
But what about
the way
just
things
from where
happen.
you're sitting, just your perch?
So for TriumphPay, we feel like, and for the industry, while there is some slowing and has been some slowing that's happening, we feel like it's flattened out. And so from the view that we have, it starts to feel like things are leveling, right? And we're going to start to see some more normalization in the industry. But looking at that lens from, a 4 to 6 week view is too short to be able to make a call. And so we have seen, average invoice prices fluctuate from week to week pretty substantially from all the different indicators, different things that happen in the industry, whether it's weather related or inflationary related. And so it's just a very volatile market. And, we will continue to be here and support carriers through the process and brokers through the process so that we can make sure that their businesses are ready to address that volatility. And that's what TriumphPay does.
All right, Melissa Foreman, president of TriumphPay, joining us via Zoom from Dallas, Texas, with a check on the trucking industry.
Now let's get a check on the latest world and national news. For that, we go to Nancy Lyons in our 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. The death toll is now more than 3,400 from earthquakes in Turkey and Syria. Authorities expect that number to keep rising. White House Press Secretary Karine Jean-Pierre says the U.S. is offering its help.
The president authorized an immediate U.S. response in addition to the U.S. personnel currently on the ground. We are in the process of deploying additional teams to support Turkish search and rescue efforts.
Karine Jean-Pierre also says President Biden is hoping to speak with Turkey's president very soon. Well, President Biden will set out his wish list for Congress in his State of the Union speech tomorrow night. We get more on that from Bloomberg's Irv Chapman.
The president has been calling for bipartisan compromise. Isaac Boltanski, director of policy research for the firm BTIG, said in a Bloomberg interview he might find it on only two major issues.
One is China hawkishness, and the other is big tech bashing, with their concerns regarding the growth and expansiveness of the big tech companies. The problem there, however, is what is our response? Because both ends of the ideological spectrum have a disdain for big tech for different reasons.
The appearance of TikTok's chief executive at a congressional hearing next month, Boltanski said, will be crucial to the fate of his firm in the United States. In Washington, Irv Chapman, Bloomberg Radio.
Treasury Secretary Janet Yellen says inflation is coming down and the economy is on a path to avoid a recession.
You don't have a recession when you have 500,000 jobs and the lowest unemployment rate in more than 50 years.
Secretary Yellen appeared this morning on ABC's Good Morning America. Authorities in East Palestine, Ohio this afternoon have been executing a controlled release of vinyl chloride, a toxic chemical that was being carried by a train that's been smoldering since a derailment on Friday. Global news powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Hey, it's 4:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. Down day for the Dow, the S&P, NASDAQ as well. Lots of earnings after the close of trading. Spirit Air out with adjusted earnings per share for the fourth quarter that did beat the average analyst estimate. Spirit, of course, being acquired by JetBlue. We've got Spirit shares up now by 3.6%. Pinterest reporting revenue for the fourth quarter that missed the average analyst estimate. After ours, we do have Pinterest shares trading down now by just about 9.5%. Also out with earnings after the close of trading, Take-Two Interactive Software. That's the video game publisher known for the best-selling franchises Grand Theft Auto and Red Dead Redemption. It cut its outlook for bookings in fiscal 2023. Federal Reserve Bank of Atlanta President Raphael Bostic says January's strong jobs report raises the possibility that the central bank will need to increase interest rates to a higher peak than policymakers had previously expected. As for the overall mood of the market, given the backdrop of the Federal Reserve, Amanda Gotti is Chief Investment Officer at PNC Asset Management Group, and she was our guest right here on Bloomberg Business Week.
I think investors are really conditioned to everything moving at warp speed. We've been in a high volatility regime since the onset of the pandemic, and I think investors would just like this whole Fed tightening cycle to be over with at warp speed. And so that's why we keep saying market's very much fighting the Fed on this, but it's a longer for longer dynamic here in play.
S&P today down 25, a drop of 0.6%. The Dow lower by 35 points, down 0.1%. NASDAQ down 119, down 1%. 10-year yield 3.63%. Spot gold up 0.1%. 18.67 the ounce. West Texas Intermediate crude up 1.3%. 74.33 a barrel. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is a Bloomberg Business News Flash. Well, on the Bloomberg today, there is a Bloomberg Intelligence report noting U.S. housing data. We know it's been in a free fall for the better part of 9 months, but how recently some reports reflect some near-term stabilization and in some cases modest improvement in activity. And this, Tim, may have to do with lower rates. So maybe we could see a more positive feel in the housing market.
Well, at least our Drew Redding, our senior analyst at Bloomberg Intelligence, writes that in a note today. So with more on housing, let's get to our guest. William Doherty, I should say, is the CEO of Walton Global, the privately owned land, asset, and real estate company. It has $3.6 billion in assets and over 98,000 acres of land under management in the U.S., nearly 100,000 investors globally. Bill, good to have you with us. Bill joining us via Zoom from Scottsdale, Arizona. Okay, Bill, so how do you, if you look across the industry right now, how would you describe it?
Well, first of all, Carol and Tim, thanks for having me on your program. It's an honor to be with you here today. In terms of the market overall, we at Walton, we're quite bullish as to where things are heading right now. Don't get me wrong. The last 6 months of 2022 had significant headwinds. A lot of our builder clients who we sell land to, they pumped the brakes. Some even hit the brakes very hard. But what's been happening month on month over the last 90 days is you see starts going up, permits going up, sales are going up. The homeowner, the person looking for a home, they're getting used to these higher mortgage rates, which are almost double what they were a year ago. But they've come off their high of about a 7.25% 90 days ago to what were they? The weekly average last week was 6.1%. So you're having more and more people coming back into the marketplace. And the primary reason for that is that there's such a high demand for housing in the United States. Depending on who you talk to, we have a shortage of anywhere from 4 to 6 million residential units.
I'm always amazed. Tim's heard me say it a million times that we had a glut of houses coming off of the great financial crisis, and now we have, once again, we don't have enough homes. I know builders are careful in terms of building. They want to make sure the demand is there. Is the land there, though, to home builders to build?
Oh, absolutely. In our case alone, We look at the national builders who we have relationships with. We look at them as clients. We feed them our land assets throughout the southern smile of the United States and up in Colorado as well. And the land assets where we're feeding them our land to feed their pipeline, they're taking that down phase by phase. And they have their work program already set in place for 2023. And now what's happening, and frankly, Carol, I talk to builders every single day at the corporate level, the regional level, the divisional level. And every single time I have a conversation, even out in the western states where it got hit the hardest over the last 9 months, they're starting to put the pedal to the metal because they want to start building up for their programs in 2024 and 2025. And the land is there and it is entitled and ready to be developed. It's just making sure that you have the consumer coming in, taking down the houses. And we were so underbuilt throughout the 2010s as a result of the last real estate crisis that the builders now are so much more sophisticated. They really are. And they just want to have that just-in-time inventory in terms of the land and the finished lots so that they do not have too much inventory on their balance sheet. And a company like ours and many other companies like ours are there to feed them the assets that they need.
How are they doing in terms of actually finding people to build these homes and finding materials to actually build them?
Well, the good news is the silver lining in what's happened in the second half of 2022 is that the cost to build a home has come down significantly in terms of lumber and copper. Even the labor costs are starting to come down significantly. Land development costs have maintained steady, and that's probably a result of the infrastructure bill and the local, state, and federal governments having their infrastructure programs getting kick-started. But the price of a home and the time to deliver a home has come down significantly. And, you know, I'll say this for builders, you know, we talk about home builders. They're not just there to build houses. They're in the business of selling houses. And I know that sounds quaint, but if there's any person out there or family out there that's looking to buy their first house or to upgrade or to downgrade, the builders are out there to work with them to get them into a house through upgrades, through incentives, by paying down their mortgage. Because they want to hit their unit counts. They want to try to hit the same unit counts as what they did in 2022.
Hey, Bill, one thing I want to ask you, and it came on my radar, and that has to do with investors picking up land specifically for water rights. And we're seeing that out in Colorado. Is that at all part of your investment strategy?
Oh, absolutely. In Colorado, it's funny you bring that up. You know, you can go out and buy a piece of land, and not all land is created equal. And truly, in the state of Colorado, attaining water rights is usually more valuable on a per acre basis than the actual land itself. And we won't buy land in Colorado unless we already have those existing water certificates or water rights. So it is a growing business here in the United States, particularly here in the Southwest, California, and Colorado as well.
Is that, I mean, is that troubling at all to you? We're talking about a natural resource here.
Is it troubling to me? It's something that we all have to be aware of. If the federal government, the state governments, and private industry get together, we can come and attain a solution. We really can. I have many thoughts on this topic. I really do, because we're dealing with it with our assets here in Arizona, more so than we're dealing with it up in Colorado.
Right.
Where if you don't have your assured water rights, but you have land, which in some cases we have that, then you're going to have to work extra hard to try to get those water rights in place.
Right. Bill, hey, listen, we have to leave it there, but definitely look forward to catching up with you in the near future. Really appreciate your time. Bill Doherty, he is Chief Executive Officer at Walton Global. They are a privately owned land, asset, and real estate investment company. Assets around the United States, global investors, about 100,000 investors globally, based on their strategy. So interesting take there.
Yeah, really interesting stuff.
Yeah, the water rights use, just kind of fascinated by this, a little horrified as well. This is Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
It is 4:53 on Wall Street. From Bloomberg World Headquarters, I'm Charlie Pellet. Take-Two Interactive Software, the video game publisher known for its best-selling franchises Grand Theft Auto and Red Dead Redemption, has cut its outlook for bookings in fiscal 2023 while giving a disappointing forecast for the current quarter. Also, Activision Blizzard reported bookings that beat analyst estimates on the strength of a new Call of Duty release as well as several other big titles. Federal aviation regulators are accusing United Airlines of skipping safety checks on more than 102,000 flights in recent years and are seeking a $1.1 million fine. And with more, here's Bloomberg's John Tucker.
Charlie, the Federal Aviation Administration says United removed the pre-flight fire system warning check on its fleet of Boeing 777s in June of 2018 and continued to operate the planes without it until April 2021. Such a large proposed penalty by the FAA against a major airline is highly unusual in recent years because the agency has adopted a system encouraging carriers to report their own errors in exchange for not seeking fines. United has 30 days to appeal the penalty. Charlie?
And that's Bloomberg's John Tucker reporting. Alphabet's Google getting its Chat GPT competitor ready for prime time. The company says its conversational AI service called Bard will be opening up to trusted testers. And those are some of the top company stories that we're following this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. It's about 5 minutes until the hour. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in our 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. U.S. officials say improvements that were ordered by President Biden to strengthen defenses against Chinese espionage actually helped identify last week's spy balloon. They say it also helped determine similar flights were being conducted at multiple points during the Trump administration. Former U.S. Ambassador to China, Gary Locke, tells Bloomberg shooting it down over water was smart.
Had they shot it down over land and it had come plummeting down onto fields, onto buildings, it would have the pieces would have been demolished into smithereens, into millions of pieces. Here, at least in shallow water, they're able to retrieve it and hopefully gain sizable pieces and analyze it.
Former U.S. Ambassador to China, Gary Locke, is now the interim president of Bellevue College. They're still clearing debris in southern Turkey and parts of Syria, where a magnitude 7.7 quake has left more than 3,400 people dead. That quake was followed hours later by a magnitude 7.5 in the same area. White House Press Secretary Karine Jean-Pierre says the U.S. is sending rescue teams, and President Biden will likely soon receive an update from Turkey's president.
We anticipate the president and President Erdogan will have an opportunity to speak very soon, and we will certainly have a readout when that conversation occurs.
Again, White House Press Secretary Karine Jean-Pierre. Authorities say they stopped an attack against Baltimore's power grid that could have caused widespread damage. Police arrested two people, Brandon Russell in Florida and Sarah Clendaniel in Maryland, for plotting the attack. U.S. Attorney Eric Barron.
As the criminal complaint alleges, Clendaniel and Russell conspired and took steps to shoot multiple electrical substations in the Baltimore area, aiming to, quote, completely destroy this whole city.
Eric Barron says the suspects had racially motivated extremist views. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carol and Tim.
Thank you so much for that update, Nancy Lyons. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. In about 8 minutes, you can find out if your business qualifies for Employment Retention Credit Assistance. Innovation Refunds has helped thousands of small to medium-sized businesses claim the ERC and may be able to help yours too. Time is running out to claim the ERC, so get started today. Learn more at getrefunds.com.
Hey, we want to mention some headlines crossing. It just caught your attention. It was a name that we've been talking about, Bed Bath & Beyond, planning to raise up to $1.025 billion through offerings, but says no assurance it will receive the proceeds. So plans to raise an additional $800 million proceeds via preferred stock and warrants.
I'm going through the press release here. The company expecting to raise approximately $225 million of gross proceeds in this offering, together with an additional approximately $800 million of gross proceeds to the issuance of securities requiring the holder thereof to exercise warrants to purchase shares of Series A preferred stock in future installments, assuming certain conditions.
In the after hours, bouncing around a little bit, down about 1%, down a little bit less than that. So we are seeing certainly some movement. Stock gained 92% in today's session.
The company is intending to use the net proceeds from the initial